Welcome back, everybody, to Contracting Business Basics. I'm your host, Lori Rawlings, Executive Director of the Plumbing and Mechanical Contractors Association of Oregon, Southwestern Washington, and Northern California. We're presenting this program to you in conjunction with the Mechanical Contractors Association of Western Washington. And today we are going to be doing learning module number 4 regarding banking. So I'd like to turn it over to our instructor, Hank Brancasio. Hank, welcome back.
Thanks, Lori. Good to be back. We've covered account management, building a financial roadmap, SWOT analysis. Now let's talk about banking. Now, banking, which is learning module number 4, is shown on the screen, and the next 4 after this. So legal issues, attorneys, financial record keeping, which is bookkeeping and accounting and accountants, insurance and bonding. These are your 5 key critical external partners you will have in running your business. So I don't care if you have a small business or it's a big business you're taking over. These are your critical partners that a lot of people may not see as a partner, but they really are external. You know, your banker, your attorney, from that standpoint. So today we're going to talk about banking and bankers, which is not a dirty word. And I think it's an important issue as you run your business. So let's talk about some objectives today. So understand that everybody watching this has a bank account or should have a bank account, but it's a private bank account. It's a personal bank account. It's not a commercial banking relationship. You want to somehow develop a commercial banking relationship with a bank that deals with businesses. As an example, you might have a personal bank account, checking account, savings account, wherever it might be. You're going to need somebody who really understands how to work with a business. And so that's important when you're doing this. You also need, or another objective we're going to try to get through, is what a banking relationship can provide you and why you need a separate business account. It's important to understand that, and we're going to talk about that a little bit. And then finally, we're going to wrap up with a line of credit. Now, some of you may understand what a line of credit is, but I can assure you, if you're starting a business, if you're running a business, if you've taken over a business, you need a line of credit, and how to manage that line of credit is important. So those are some of the objectives we're going to try to get through today as we navigate through this banking learning module. So banking is not just a place where you deposit money, even though the first bullet item there is business checking account and associated services. I think that's important to understand that you want to do that. And we're going to get into why you want to do that. Don't mix your personal accounts with your business accounts. A big mistake. It's hard to keep track of things, and we'll talk about that a little bit. But what can you use a bank for? A building loan. That's an easy one. If you want to get a building, you want to buy a building, maybe you don't need a building, but if you did, you'd need a mortgage, and a bank can provide it for you. Long-term equipment loans. Maybe you got to buy equipment, mechanical equipment, cranes and lifts and forklifts, maybe machines, prefab machines you got in your shop. That's expensive equipment. You want to buy it, you're going to have to go get a loan to get that equipment purchased if you buy it. Vehicle financing. Now, vehicle financing, I want to say that you can go to the bank to get vehicle financing. You might also go to a leasing company and have them do that financing for you, but it's another place or another use of a bank. And then finally, the line of credit. And I think the line of credit is the part that a lot of people may or may not understand. They may just think, well, I got some money in the bank, and do I really need a line of credit? And we're going to talk about that line of credit in a little bit more detail on a future slide. Now, I came from a large corporation where the bank really was the corporation. So I didn't have to deal with it. But when I took over a mechanical contractor, I had to develop a relationship with the banker. And the banking firm that the contractor dealt with, they had used this bank for 15 years. It was a huge bank, a major player in the marketplace, and things did not go especially well over time. Not for anything we did, but just keep in mind 2007, 8, 9, 10, there was a mess in the economic world and the banks, and this bank got themselves in a little bit of trouble, one of many. And so they tried to take that out on us by raising the interest rates, raising some of the criteria for having a relationship with them. A lot of this learning module presentation comes from experience first dealing with a bank that had been a strong partner for 15 years and then switching to a new bank relationship, which turned out to be a great move. And so I've got some experience with doing this. And I think what that means is don't be afraid if you pick a bank and 3 years down the road, you find that that bank's just not doing it for you. Well, then don't be afraid to change banks. My controller at the time thought I was crazy, thought you just don't want to just switch banks, but he even agreed once we did it, it was a really good move for the organization. Kind of a key partner, you really want to do that. You need to have a single point of contact with this bank. And when we're dealing with 3 or 4 people, you need an advocate for you within the banking organization. So when you need to borrow money, when you run into an issue that you need support from the bank, that bank is going to support you. It's not like you've got 3 or 4 different people. You need somebody that can really put a plug in for you up higher up in the banking organization with the underwriters when you need to borrow money, when you need to do something financially.
So, Hank, how do you develop that single point of contact? Who should you be looking for?
Well, I think you need to, when you're choosing a bank, you need to interview multiple banks and you need to interview the banks and understand what they can provide for you, have them tell you what their program is. I think that's important from that perspective. I think when I switch banks, and again, we must have interviewed 5 or 6, maybe even 7 different banks in the marketplace, mostly from word of mouth. We had talked to different people and said, oh, you should try this bank, you should try that bank. And we interviewed the banks, met with them personally, which today may not seem like a good thing to do, but it really is. And finally, and this was kind of the point that pushed us over the hill with the bank we ended up choosing. The president of the bank called me and said, I'd like to come over to your office and meet with you along with some of our executives. And I said, that'd be great. But unfortunately, we're having a Christmas party today and I can't do it today. And he said, and I always remember this, he said, that's not a problem. Can I come over to your office and meet some of your people at the Christmas party? And we were just doing a lunch. And I said, yeah, if you don't mind doing that. And so he came over, he met some of our employees. We sat and had lunch together in my office, kind of all crammed together around a small table. It was a great selling point to me that he really took an interest in our business. And I think that's important when you're choosing a bank, when you're trying to develop a relationship. And so don't be afraid to go out and interview like you'd be interviewing an employee. Go interview, understand what this bank can provide, and look for a bank that's competitive, that can provide you with good terms. Doesn't have to be the lowest terms, but competitive terms, and somebody that's willing to bring new ideas to your business, because that's so important. A bank that just sits there and doesn't do anything and only responds when you call them is not what you're looking for. You are looking for a partner, an external partner that's important. Understanding that, and that bank can provide you with a ton of information, because guess what? They're not just your bank, they're other businesses' banks as well. And so they can really help you from that standpoint. So I would say, how do you develop a good banking relationship? You got to interview, you got to have a good account rep that's handling your account. Meet people beyond that account rep, because here's the thing, banking account reps, like all businesses these days, don't last forever. So they might be around today, they might even be around for the next 5 years, but then sooner or later, all of a sudden they leave. And if that's the only person you have a relationship with, that can be a problem. So that would be my advice when it comes to looking for a good relationship with a bank and how to find a bank. Okay, so how does the banking relationship help you? So now you pick a bank, you have a relationship, you have call them a salesperson who's calling on you, it's a banker, and they're the people that are helping you. What is this relationship good for? Well, it's good for capital expenditures, obviously, tools and cars and buildings and line of credit, because that's what you're getting from the bank. You're borrowing money from the bank. If that goes well, that'll put you in a strong financial position. If that doesn't go well, now you're in a weak financial position, and that can really affect your ability to secure work, especially if you're starting out or you're coming out of a slow economic time. That's important to understand. What you don't want to do is tie up your personal capital. I cannot stress this more. You don't want to take your personal capital that you may have in your name and start to use that capital to run your business. You want to build this relationship with the bank from that standpoint. Improve cash flow on a daily, weekly, monthly basis. You are in a business, the contracting business, where payments come slow. Can't express it any better than that. Could take 120 days, could take 60 days. You could be in a situation where you're billing $30, $40, $50, $100,000, $200,000, $300,000 a month. But guess what? It may take you 6 to 12 months to collect all that money for a variety of reasons. Final payments may take 6 to 12 months. You are going to need the means to develop some cash flow because there are people that are going to have to be paid. The obvious one is employees. They get paid every week. And so you may not have this abundance of cash laying around that you can use. So developing a good banking relationship just takes a lot of stress off of you and helps your operation run much better. I can't stress this enough. At the end of the year, every year, you've got to do taxes, state taxes, you got to do federal taxes. You may have to do county taxes or city taxes, depending on where you're located. You start mixing everything together into one business account with other things, and it becomes very difficult to track. So it's easier to track things if you have a business account. So if you're starting off a small business and it's just you, and let's just say it's a small plumbing business, open up a business account, open up something separate and just let everything flow through that account, pay yourself out of that account so that at the end of the year, it's just much easier to track and settle taxes, end of the month, end of the quarter, end of the year, et cetera. Keeps everything clean and separate. And your accountants that might be doing an audit, they're going to ask for your banking records. And so by having a separate business account, it's just much cleaner to say, okay, here's a copy of my business banking record, and now it's clean. You start mixing personal stuff in there, that's when businesses get in a lot of trouble. And so I would suggest that you clearly do that. And if you ever get audited, and trust me, if you've been in business any length of time, if you are going to be in business any length of time, getting audited is not that unusual, whether it be a state audit or a federal audit. I've been through a state audit. It's not fun. It's manageable, but it's not fun. And so keeping things as organized and separate from your personal finances, the better off you're going to be.
And speaking of audits, Hank, and this is something we will cover in a later learning module on union financial commitments, you are also going to be audited on a regular basis by the trust funds that administer employee benefits for your collectively bargain employees, your union member employees, because they take a look at your payroll. They take a look at whether or not you've actually been paying the right amount of benefits on your employees, if you've been paying them on time. Audit, it's not a dirty word. Expect that you will be audited on a fairly regular basis by any of those entities, state, federal, or the union financial benefit funds. One other question I have also
Sure.
on just going back to the previous slide about a separate business account, would you
Yes.
recommend a separate business credit card as well, separate from your personal credit cards?
It helps when tracking expenses at the end of the year. If you have a separate credit card account and it's under your business and you charge everything to that account, at the end of the year, it's just cleaner. You can do it without it. It's just more difficult because now at the end of the year, you got to go through, okay, that's a business expense, that's a personal expense. It's just harder to do, takes a little longer. Whereas if you have your separate credit card account and you're buying a lot of stuff that you're putting on that credit card, then you're in a situation where it's just much cleaner at the end of the year to pull those records out and go, here it is. I got it all. It's all done. It's separate. Yeah, I would recommend that as well. If you're going to have a credit card.
Great, thanks.
Line of credit, important component if you are working as a mechanical contractor. Again, I mentioned this earlier, construction business is typically slow to pay. I don't care if you think you are the best in the country at billing and collecting. The business is slow to pay. It's as simple as that. It's hard to get paid in a timely manner. We work in a business, an industry that, for all practical purposes, it's hard to believe how poor paying this business is. And it starts with the customers. And if you're working for a general contractor, the general's got to get paid from the customer pays the general pays you. Then you throw in a construction manager, then you throw in an owner's rep. All these different levels affect timely payments. So it's not like I send a bill out on a Tuesday and the following Wednesday I'm collecting a check for $30,000. It doesn't work that way. It just doesn't. I wish it did, but it doesn't. And so you're going to need some type of line of credit to cover your expenses while you wait for payment. It's as simple as that. People, employees, as well as vendors, they expect to get paid in 30 to 60 days. If you buy major equipment, whether it be plumbing equipment, HVAC equipment, those folks, they're not waiting 120 days to get paid. They want their money right away. And the bigger the companies that they want their money faster. So if you're buying major equipment, you need to pay that. Okay. You may not have received money yet on a project. You might be behind. You're still going to need to pay that. Payroll and taxes and union obligations. Now, let's talk about the union piece real quick in taxes. You have to make these payments. You cannot put the federal government off, the state government off, the union off, and say, well, listen, I'm a little behind. I've billed everybody, but I haven't collected my money yet. They don't care. You need to pay it. It's as simple as that. So many a contractor has gotten behind when it comes to payroll, taxes, and union obligations. And then all of a sudden, they're in a hole of $50,000. It's hard to get out of that hole. So that's where that line of credit comes in that you can tap into. An example, a line of credit might be $750,000 line of credit at X percentage of interest that you can borrow against when you need to, because many of these obligations are weekly or monthly. And again, it might take you a long time to get that. It's a revolving bank loan. I can't explain it any better than that. The last thing on this slide is line of credit still needs to be managed on a daily basis. It's not a free service. You're paying for this. And the interest rates on these lines of credits have gotten more expensive than they once were. There was a time when I was running a business, I was paying less than 2% on a line of credit, 1 to 2%. It was just what it was tied to. That's not the case anymore. You could be paying 4, 5, 6% on a line of credit. So it's not like, I got this unlimited revolving credit with a bank and I'll just borrow against it all the time. Well, that gets expensive really fast. So if you're into a line of credit for $750,000, $500,000, and you're paying 5% interest on that or 6% interest on that, that can get really expensive. You still need to manage with a goal of, I want my line of credit to be zero, but it will float. It might go zero this month. Next month, it might be $250,000. So it's important that you still manage it closely, but you got to have that line of credit. It just relieves some stress from your life and makes things a little bit easier.
So Hank, are there things that you can do to have a lower interest rate on your line of credit versus a higher interest rate?
Well, it's tied a lot to your bank. It's tied to your financial credibility. It's tied to how fast and how well you pay. It can vary. If you're hard to pay it back, if you let it creep up, if you don't have a good bank, maybe they're not very competitive, you could end up with a 7, 8% interest on a line of credit. It's no different if you think about it. Two people go in for a mortgage. One person's got a really good credit rating. One person's got a poor credit rating. One person pays all their bills on time or early. The other person pays them all late. Guess what? You're both not going to get the same interest rate or the same terms. So that's why it's important to be working with a good banker that's got good interest rates. And don't be afraid to ask them, hey, if I have a line of credit, how much is that line of credit going to be? Is it going to be 250,000? It's going to be 500,000, 750,000, $1 million, whatever it might be. And what are your terms? What are you tying it to? They might tie it to prime. They might tie it to whatever they're tying it to. Understand that. And that's where the different terms come in. So they might say, well, your line of credit would be prime plus a half a point or plus a point, whatever it might turn out to be. At one time, it was tied to other categories other than prime. And so that's why it's gotten a little bit more expensive. But again, you want to negotiate that. That's an important component to this whole process. And it has to do with your financial strength. The stronger you are financially, the better line of credit and terms you're going to get from the bank. That's why sometimes it is difficult if you're starting off, you're a small company, to have the same financial flexibility of a large mechanical contractor. They might be super strong, been in business 50 years. They've got a track record with a bank. The bank knows how they pay their bills. You're a little unknown entity that they're not really sure how you're going to pay your bills. So that's why it's important to have a good relationship with the bank. This is where it comes in and you can call your banker up and go, look, I need some help here to get through this because I'm running into some problems. And so I need some good terms. So I think that's all part of the process of negotiating, meeting with bankers, and settling on the right bank that will help you out. And again, don't be afraid 5 years down the road, maybe that bank's just not doing it for you anymore. Don't be afraid. You know what? I'm going to switch banks. It's hard to do. It seems like when I did it, there were people in our organization that were like, you're crazy. Like, why would you? We've been with this bank for 15 years. And it just reached the point where it got out of control. It was costing me too much money to be with that bank. So I switched.
Great. And, not to keep beating up on general contractors, but we talked in earlier learning module about building a financial roadmap on how long it will take you to get paid, especially if you're working for a general contractor, because they do tend to like to use you as their bank. Just one quick story. I remember one of the contractors I've worked with over the years, he told me that one of the general contractors he worked with kind of was bragging that they had never dipped into their line of credit ever because they didn't need to. Because
I
they
think that was a story I told you, and it was a large general contractor who I had a good relationship with, and they were using a bank that I eventually ended up switching to. And so I called the president of the general contractor up. I just wanted to get some feedback of what he thought about his banking relationship and what he thought about this bank. And he gave me some good advice. But yeah, he did say to me, yeah, we're never into our line of credit. Well, that's because they're a general contractor, and general contractors, when they're running low, they just stop paying their subcontractors. Not to throw general contractors under the bus, but that's just, they're up at a higher level, and that's just the way it works sometimes. I believe that the smaller the general contractors sometimes you work with, you might get paid faster than the larger ones. The larger ones just feel like they can flex their muscle a little bit more and come up with more reasons why they're not paying you, from that standpoint, So we'll talk a little bit more about that as we go through these other learning modules, but clearly you got to have a good banking relationship, key partner to what your business needs, and will help you and relieve some stress in running your business.
Fantastic. All right. Thanks, Hank. And thanks everyone else for joining us. We'll see you in the next learning module.
Great. Thanks, Laurie.